Right now, it may appear to be a risky moment to begin investing in real estate. However, for value-seeking investors like myself, the scariest time to invest is when the economy is doing well and housing prices are growing at a rapid pace. This is because identifying the peak of a market is tough, and no one wants to buy at the top of a market only to see the value of their investments collapse during a downturn. An economic downturn provides many opportunities that are nearly impossible for the average investor to take advantage of in a good economy. Welcome to the From Zero to Wealth channel. If you're new here, this channel provides you easy to understand information about wealth creation through personal finance and investing, teaching you what schools should have. And if you're returning, welcome back. In this video, we'll talk about investing in 2023 and the 5 reasons why you should invest in real estate now. Is 2023 a good time to invest in real estate? It's a fair question. I'll get into the specific reasons, but let's take a minute to look at the current market. Right now, the market is anything but usual. According to the latest existing home sales data from the National Association of Realtors, sales are down 23.2% and prices are down 1.7% from this time last year. Inventory is low and prices are high, but that situation is not going to remain true forever. Real estate investing can be a terrific way to build a lot of wealth right now in 2023. Because the housing market is currently out of control, consider real estate as a long-term investment. Not only are all home prices growing, but mortgage rates have reached their highest level in nearly a decade. That implies that now is an especially challenging time to acquire income properties or find affordable homes that may be restored and flipped for a profit. Real estate typically outperforms other assets in terms of value appreciation. Recent rate rises have affected home values. In terms of housing supply and demand, 2023 is a balanced year. This is no longer a seller's market. Rising interest rates increase monthly mortgage payments, reducing home buyers and decreasing property prices. Investors in real estate seek less competition and lower prices because real estate investing is a long-term endeavor. Perspective is essential. Interest rates were quite low in 2020 and 2021, hovering around 3%. Recent Fed actions aimed at fighting inflation have raised mortgage rates. There is no imminent collapse of the housing bubble. The average monthly rent is growing at a rate that is unusual. Real estate investing is often associated with financial gains due to its limited supply and historically sound investment reputation. But evolving economic factors have led to changing perceptions and even fear of real estate investments. People believe there's no money left. They may also assume that they cannot prosper unless they invest big sums of money. Both of these assumptions are incorrect. Real estate has long been thought to be a good investment. Regardless of the market, real estate investing is an excellent method to build wealth. Down markets may be the richest in terms of opportunities. Here are 5 reasons I see right now as a good time to invest in real estate. Reason number 1. Recessions increase investment opportunities. Recessions can cause financial hardships for property owners, leading to foreclosures and distressed sales. Investors can purchase these properties at discounted rates, leveraging the distressed nature of the market. Prices in the distressed property market drop more quickly when the economy is in decline. This is due to the fact that not only are more neglected homes available during recessions, but it is practically impossible to obtain regular financing for this type of property when the real estate market is declining. During the Great Recession, the distressed house submarket dropped by up to 50% in a few years. Reason number 2. Economic factors will influence markets. Second houses and vacations are a luxury that most individuals will give up during economic downturns. These reductions will have an impact on the real estate market, as holiday rentals investors battle to maintain homes occupied and profitable. During a recession, invest in places where the population is expanding. Increased population will boost rental rates and, as a result, property values. Reason number 3. Don't wait for the market to bottom out. Timing the market rarely works. Even if you could know exactly what was going to happen, you likely can't act upon it. Many individuals believe that investing in a falling or about to fall real estate market is a bad idea. However, if you look at the larger picture, it may be the perfect time for you to invest. Consider the 2008 financial crisis. You would have lost 90% of your home's worth if you bought at the peak of the market in 2007, when the typical home was $257,000. However, if you had kept the property until 2020 instead of selling it, the value would have increased by 134%. If you had tried to buy at the bottom in 2009 but was unable to do so, you would have missed out on more than 5 years of growth. As a result, the best moment to invest in real estate is right now. Reason number 4. Real estate is a hedge against inflation. Inflation is caused by the dollar's depreciation in relation to the goods and services we purchase. In general, the more money pumped into the market, the higher the price of goods and services. Since the dollar is worth less and assets are worth more, many savvy investors know to reduce their cash savings by buying real estate assets as a hedge against inflation. Rental real estate is a perfect asset that not only protects against the loss of the dollar's value, but also provides income during economic downturns. As inflation rises, so do property values, and so does the amount a landlord can charge for rent. This allows the landlord to earn a higher rental income over time, keeping in pace with the rise in inflation. For this reason, real estate income is one of the best ways to hedge an investment portfolio against inflation. Reason number 5. Housing supply and demand. One of the main causes of an appreciating housing market is a growing population. When an area gains population, rent will increase and home prices will soon follow. Conversely, when the same area's population decreases and there are more homes than people to fill them, then the home values will fall. The obvious and reasonable solution to the supply problem is to create more inexpensive homes. If only it were that easy. Almost half of home builders did not return after the 2008 recession. Since then, new building has lagged behind demand. During uncertain economic times, home builders are reluctant to invest in new developments. Shifting real estate markets can expose builders to millions of dollars in losses if the market falls dramatically before the projects are completed. No one, of course, can look into the future. Despite the economic downturn, I predict that housing values will remain strong and rentals will rise. On the other side, I believe inventory will rise as a result of some homeowners being compelled to sell for personal or financial reasons. This will open up a number of exciting possibilities. We hope you enjoyed this video. Thank you for watching, and if you enjoyed it, please subscribe to the channel, hit the like button and turn your bell notification on for more videos like this. We'll see you in our next video.